Now, have you ever wondered what happens when suddenly the price of goods and services keeps getting higher? Whereas the value of your money keeps decreasing. You basically begin to think, how is this happening? Who can save us? Well, that thing that makes you wonder is called inflation. And the savior you seek is probably not going to come unless you invest. Well, investing during inflation can be pretty unrealistic because you ask yourself, how do I invest during inflation? Whereas the thought of having to invest your hard-earned money at a time when the prices of goods and services keep going up and your means of making income remains where it is. It gets to a time when the inflation rises, leaving your income with little or no value. And you ask again, how in the seven kingdoms do I invest during high inflation? That question that has got you bothered is what we are here to answer. Not many know what the term inflation is all about. Some people live in countries where the rate of inflation rises rapidly and uncontrollably, but they do not understand the concept of what they face. I mean, inflation doesn't get to make headlines like political and entertainment topics, but it affects our lives a lot more than those topics could ever do. So before we go any further, let us have a look at what inflation truly means. Inflation is described as the rise in the price of goods and services over a period of time. It is the measure of the degree of how costly goods and services are. What this means is that if a person has $500 and the value of that $500 before inflation is an iPhone 13, that $500 would probably struggle to get an iPhone 11 during inflation. Inflation basically increases the prices of commodities, reducing the value of money. The talk of persistent increases in the price of commodities and services is enough to leave a community and a person in a state of instability. Going back in time, and for those of us who can remember, the 2008 global inflation rate went to 6.4% from what it was in 2007. This definitely left the whole world in shock. Probably not the kind of shock you get when you realize you've lost your wallet. This felt bigger. In fact, President Gerald Ford in 1974 declared inflation as public enemy number one in the United States. I mean, that would basically be comparing inflation to a large terrorist invasion. Hopefully not. There are two sides to every coin in life, the good or the bad. Inflation is a threat to the state's economy if the percentage is very high. However, low, stable, and predictable inflation can be beneficial to the economy. For instance, predicting that prices of commodities or services will rise at a later date gives an investor an incentive to make investment decisions earlier before inflation, which improves economic performance. This lets an investor buy up a specific commodity while the price is stable. At the start of the inflation, when the prices of those commodities rise, so does the value of the investment. Also, managing finances can be a very difficult task, especially during high inflation. From high prices of goods to loss of purchasing power, as well as stagnant income, an economy can possibly be described as sitting on a keg of gunpowder. To avert the negative impact that is associated with inflation, individuals or organizations must learn how to keep the effects of rising prices away from affecting their finances. Hence the need for a guide on how to invest during high inflation. Investing in this case would be committing money or capital in the hope of financial gain, the gain that will be used in the battle against the public enemy, that is inflation. Anyone looking at making an investment of any kind would do that with the ultimate goal of maximizing their returns. However, not everyone's ball gets in the net. In this video, I will be sharing with you some striking options to make your goals count. First on the list, investing in commodities. Investment in tangible assets is one of the best ways to maximize and make good money during inflation. Prices of goods tend to rise during this period, and as a result, are considered a good investment. These commodities could include raw materials, like raw agricultural produce. As much as the prices of finished products from these items increase, commodity prices also rise. Hence, investment in commodities is highly encouraged in an inflationary environment. To further understand the concept of investing in commodities, imagine you have $1,000. Holding onto it or keeping it in a bank at the start of inflation would be a very unwise and extremely unadvisable decision. However, taking that money and using it to either start a farm or purchase a large number of agricultural products like rice, flour, or other basic commodities would be a wise and advisable decision. This is because as much as the price of goods and services is rising due to inflation, people still feel hungry and they have got to eat. Second, investing in real estate. Inflation could mean paying more rent to your landlord or spending more money on renovation than expected. Whichever way, investment in real estate, that is purchase of land, development of estate and buildings, be it malls, stores, private houses, you name it. Investing in these can help you make more income because the price of rent rises alongside inflation. Thirdly, investing in precious stones. Another proven way to protect yourself against inflation is to invest in precious stones, such as diamond, gold, silver, platinum, bronze, and many other precious metals. Historically, these assets have proven to be highly resilient during long-term inflation. They basically are unaffected by the effects of inflation and thrive in their own realm, as opposed to other goods and services. If precious metals consist primarily of stocks and bonds, investing in precious metals can also help diversify your portfolio. Fourthly, investing in Treasury inflation-protected securities. This is a United States-backed asset and is one of the safest investments and a reliable way to maximize personal finance. As inflation increases, the interest paid on Treasury inflation-protected securities also increases. TIPS are purely government bonds that mirror the rise and the fall of inflation. Therefore, investing in them would mean mirroring the rise of your money and fall of your financial struggles. Also, we look at leveraged loans. This is a type of loan that is issued to organizations or individuals that have a poor credit history or amount of debt that hasn't been cleared yet. Leveraged loans are a potential inflation hedge that encourages floating interest rates to keep the return on investment caught up with inflation. Now, just as you know, this list is not exhaustive, as there are many investment opportunities to pursue during inflation. One thing is to know about available opportunities in investment. Another is to know how to ascertain the risk and profitability, and most importantly, how to go about it. However, there are ways and tips to find out about investing during high inflation to get maximum yields. One of which is to know your financial capacity. This is one of the most important factors, as it measures your pocket, your value, and your valuation. This is not just about financial literacy. Rather, it is about how much money you have to spend and are willing to spare on your investment decisions. Another is learning about the industry forces, which sector of the economy you wish to invest in. It is imperative that adequate research is carried out before making an investment decision. Failure to do the proper research may cause loss of money to an irreparable extent, and the loss of money brings you back to the realm of financial struggle you so desperately wanted to get out of. You should also be willing to hire professionals if you look forward to having maximum yield. Professionals in the field of finance and accounting cannot be substituted as long as you intend to leave the financially struggling town. These are people that will help in analyzing the risks, predict possible future occurrences, and also guide you on your investment journey. If you don't want to get your fingers burnt, learn to hire professionals. One important tip on how to invest during high inflation is to diversify your investment. Successful and wealthy people rarely have just one means of income. In fact, they tend to have multiple streams of cash flowing into their pockets. Take Elon Musk, for example. Having Tesla would seem like that was enough for him, but he also owns SpaceX, recently bought Twitter, and owns a couple of other businesses. Putting all your eggs in a basket when it comes to investment could be extremely disastrous. Sometimes investments are based on speculations, which may turn out badly. Diversifying your investment will be a lasting solution to bankruptcy and will keep you on board the financial train. You also need to learn to access your risk capacity. Do not go into high-risk investment if you are not disposed favorably to any outcome it may bring. Invest according to your risk power. Lower risk power attracts low-risk investment, and vice versa. When you are down in the world of investment, remember all that has been mentioned in this video, and you will find yourself with a glimpse of hope. In conclusion, inflation can be a menace to the economy when very high. It is also a tool that can be harnessed to give maximum productivity. You just have to know the right tools and the right ideas to use to attain that level of mastery in investment that lets you escape the complaints of high inflation and dwell on the gains that the period could bring you. However, to harness inflation, a sound financial education as well as high degree of financial literacy is desired. Financial education is not restricted to the classroom alone. Sticking to this channel will let you understand that all you need to get on the train out of your financial struggle is a click of a button and the right platform to give you the knowledge that you seek. We promise to bring you more financial knowledge easily accessible to you, like this video and more. For now, kindly like this video and subscribe to our channel to get more informative content such as this. Till our next video, take care and stay safe.